Brian, I've got to admit, I saw the numbers, didn't expect to see the stock down by 7%. What's going on?
Yeah, so I think there's a couple of things going on. First of all, you have a stock up over 100% over the past 12 months. So clearly, we're having a little bit of sell the news here into really what's going to be tougher second half comparisons that Macy's will be facing. So I think, that's clearly number one, just given the stock performance already and expectations were high. Number two, I think there is some confusion, whether or not Macy's really beat estimates by over 20 cents this quarter, because they include real estate gains in their numbers. We think the answer is yes. Obviously, Macy's is raising their full-year guidance by 20 cents, so we think this is a bullish print. We think they're optimistic against tougher compares in the back half. And again, while the stock is close to our price target, it shouldn't be down 9% today. We'd be buyers of the stock right now.
Well, the stock's getting hammered right now, and I think a lot of people picking on expenses. What did you think of that, Brian, on the expenses side of the story?
Yeah, I mean, I think to the point of growing the omni-channel business and growing Macy's backstage business, there are expenses associated with it. But we do think, there's more air in the room right now for Macy's. Consumer spending very strong this year. Consumer spending on apparel strong this year, better than we've seen in over 2 years. And remember how many bankruptcies there are going on in that department store space. Over 300 department stores have gone out of business and closed in the last 2 to 3 years. That's $5 billion in market share up for grabs, and we think Macy's is doing some of the right initiatives to take some of that market share.
So, Brian, I'm struggling to reconcile one thing. You sound quite optimistic, but your price target's $1 shy of where we are now. Why?
Yeah, so again, ex real estate, Macy's is trading at 12 to 13 times earnings, which historically that's been the upper end of the band. If you add in some of the debt, it's trading at 6 times EV to EBITDA. So again, from a valuation perspective, we think the stock was close to fairly valued at $39, but again, second half estimates could have upside revisions to them, I think, given the momentum to the third quarter so far.